Abe going there, trying to get Japanese companies to commit to investing in the U.S., to commit to putting money into infrastructure in the U.S. Is this the offensive play if you're a country that has a trade surplus with the U.S.?
Well, I think it is, but I think that very interestingly, like you spoke about the currency manipulation issue as well, what our work really shows today is that the cheapest currency in the developed world today is the Japanese yen. So the Japanese yen is now extremely cheap. And this is how I think that market sort of takes care of these things, that the yen, most people at the beginning of this year thought the yen was going to go down to 125. And instead it's going up the other way. That's because there's natural buoyancy out here. That the Japanese economy, the good news is that we spoke about Europe earlier, but even with Japan, the news at the margin over the last 6 months has been better than what people expected. The real problem in Japan, as you know, is the fact that the demographics are terrible. The trend growth rate in Japan, we estimate, is possibly 0.5% or something like that. So the fact that they're growing above trend, and I think that with the US, I think that, this is part of the strategy that the Trump administration has, that it sort of has the Japanese a bit off balance. They're thinking about what to do, how do we react to this, how do we sort of give something here. So I think that in that way, this is the strategy which seems to be working so far, where they're thinking about what more we can do with the U.S., what more can we give back here.
So you're in that room between President Trump and Prime Minister Shinzo Abe, right? You've had Trump come out and make a statement about Japan and sort of become a little bit more aggressive, I would say. And then he can also point to the fact that the yen is the most undervalued currency in the developed market. What's Japan supposed to do about that?
Well, I think that, it should sort of let the yen rise back again, unfortunately. I mean, wouldn't
that just be a cycle of just hurting then growth?
That's right.
If it's getting a little better, then they're just going to squash it?
Yeah, but I'm going to say that the yen is already very cheap. So I think that the natural tendency is for the yen to go up out here. I think that really is the main thing out here. But I think that we are overlooking something which is more important here, which is the fact that the Japanese economy is also doing better, and Abenomics has been so sort of trashed over the last few years. But maybe there is something to it. There's a change in Japanese corporate behavior, for one, that we noticed, that the cash management of Japanese companies, the focus on profitability has increased. So maybe there is some benefit to Abenomics as well.
PIMCO were out this morning in the last 24 hours with a note that we've picked up on here at Bloomberg, which is essentially that there is this covert currency war, a cold currency war. You used the word let, that Japan should let the currency go back again. Who? Because that's not Abe's job to some extent. Is he going to make the call to Kuroda to say,
no, I don't
come
think
off the accelerator? How does that work?
Well, I just feel that with both Japanese inflation and nominal GDP showing some signs of increasing, even though not at the target of 2% or so, the room or the need for doing a lot more monetary easing or additional monetary easing basically reduces. So I think that plays a natural role in possibly letting the yen rise a bit more. So it's basically like a monetary argument is what I'm trying to make here.
Well, let's go bigger. Let's go back to 35,000 feet and talk about the prospect for a unilateral agreement on currencies, but not that kind of G20 pathetic statement at the end where they agree not to intervene and then go back and do whatever they want to do. What is the prospect of something real in the next 5 years, a la 1985 Plaza Accord?
Well, I'm not quite sure that we need that, because I think there's a natural equilibrium process. So look at the dollar today.
Yeah.
That this is the third big bull market that the dollar has been in the post-Bretton Woods era. But the magnitude of this increase now is coming to be almost similar to what we saw in the previous bull market, which in the late 1990s, right? So that we've seen a 30% appreciation in the dollar on a trade-weighted basis over the last 5 years, very similar to what we saw in the 1990s. I sort of believe that the dollar is getting to the point where many currencies are looking quite interesting and on their own could start appreciating against the dollar. So our work basically showed that while King Kong dollar keeps marching on, there are some currencies out there which are showing signs of exhaustion. In the developed world, those include the yen, the euro is looking very cheap, and so is basically sterling. In the emerging world, the Mexican peso. That is now seeming to be almost as cheap as it was at the height of the tequila crisis back in '94. We're getting close to those kind of levels.
Yeah.
And then you got some of the currencies from Malaysia to Egypt, etc., looking very cheap. So the dollar's main sort of correction here has to be against the Chinese currency. That's the one currency where, we still think that the dollar is a bit, has room to run against the Chinese currency. But against many other currencies in the world, we feel that the dollar's bull run could possibly be coming to an end.